Get ready to dive into the world of life and health insurance with exciting, beginner-friendly training that will give you the knowledge and confidence to succeed as a future agent.
This course is designed as a supplementary educational tool to help future agents better understand and absorb materials covered by qualified trainers in preparation for the California Life Insurance Licensing exam. This is not intended to substitute the required 2-hour pre-licensing course mandated by the California Department of Insurance. All participants must complete the official 52-hour course from a certified provider to meet the licensing requirements. This supplementary course serves only as an insurance source to reinforce learning and comprehension of the key topics in life and health insurance.
Session 1, General Insurance. Chapter 3, The Insurance Marketplace. Slide 1, The Role of Insurance Agents and Brokers. Terms to remember. Agents represent the insurer, act as a direct link between the insurer and the insured. Brokers represent the client, work with multiple insurers to find the best coverage. Description: Insurance agents and brokers play crucial roles in the marketplace, but they serve different functions. As an agent, you represent the insurance company. You act as the direct link between the insurer and the client, helping clients understand their policies and assisting them in filing claims. On the other hand, brokers represent the client. They work independently, dealing with multiple insurance companies to find the best coverage for their clients. Whether you work as an agent or broker, your primary job is to ensure your clients' needs are met with the right insurance products. Slide 2. Types of agents. Terms to remember. Captive agent works for one insurance company, sells only that company's products. Independent agent works with multiple insurers and can offer a variety of products from different companies. Description: There are two main types of insurance agents, captive and independent. A captive agent works exclusively for one insurance company and can only offer products from that insurer. This can sometimes limit the options available to the client. An independent agent, on the other hand, works with multiple insurance companies and can offer a broader range of products. Independent agents are often seen as offering more flexibility, but captive agents might have deeper knowledge about their specific company's products. Regardless of the type, both play vital roles in helping clients navigate their insurance needs. Slide 3. The role of insurers. Terms to remember. Insurers provide financial protection by assuming risk in exchange for premiums. Types of insurers. 1. Stock companies owned by shareholders, profits go to shareholders. 2. Mutual companies owned by policyholders, profits return to policyholders as dividends. Description: Insurance companies, or insurers, are the entities that assume the financial risk on behalf of their clients in exchange for a premium. There are two main types of insurers: stock companies and mutual companies. Stock companies are owned by shareholders and profits are distributed to them. Mutual companies, on the other hand, are owned by the policyholders, who may receive dividends as a return on profits. Each type of insurer has its own unique structure and way of operating, but both serve the same purpose: to provide financial protection for their clients in the face of risk. Slide 4. Government and private insurers. Terms to remember. Private insurers operate for profit, offering various types of personal and commercial insurance. Government insurance programs serve social needs, e.g., Medicare, Medicaid, Social Security disability. Description: The insurance marketplace is made up of both private insurers and government insurance programs. Private insurers operate for profit, offering a wide range of insurance products like life, health, auto, and homeowners insurance. These companies are typically focused on protecting individuals and businesses against financial losses. On the other hand, government insurance programs are designed to meet specific social needs. Programs like Medicare, Medicaid, and Social Security Disability provide essential coverage to vulnerable populations, including the elderly, low-income individuals, and those with disabilities. Understanding the distinction between these types of insurers helps you guide your clients toward the appropriate coverage. Slide 5. Fraternal benefit societies and reciprocal insurers. Terms to remember. Fraternal benefit societies, non-profit, membership-based organizations that offer insurance to members. Reciprocal insurers, unincorporated groups that provide insurance for one another through indemnity agreements. Description: Fraternal benefit societies and reciprocal insurers are unique players in the insurance marketplace. Fraternal benefit societies are non-profit, membership-based organizations, often rooted in religious, ethnic, or charitable groups. They provide insurance exclusively to their members, and any profits are often used to support the society's broader mission. Reciprocal insurers, on the other hand, are unincorporated groups of individuals or businesses that agree to provide insurance for one another. Each member is both an insurer and an insured, and they share risk through indemnity agreements. These are less common but still play a role in certain specialized insurance markets. Slide 6. Risk retention groups and Lloyd's associations. Terms to remember: risk retention groups, RRGs, liability insurance companies formed by members of the same industry or profession, e.g., doctors, engineers. Lloyd's of London, a marketplace for underwriters to insure unusual or high-risk exposures. Description: risk retention groups, RRGs, and Lloyd's associations serve specific niches within the insurance marketplace. RRGs are liability insurance companies formed by members of the same industry or profession. For example, a group of doctors might form an RRG to provide malpractice insurance tailored to their needs. Lloyd's of London, meanwhile, operates as a marketplace where underwriters can come together to insure unusual or high-risk exposures, such as insuring a celebrity's voice or a company's satellites. These entities offer solutions for risks that may not be easily covered by traditional insurance companies, making them essential parts of the broader insurance ecosystem. Slide 7. Surplus lines. Terms to remember: surplus lines, coverage for high-risk or unusual exposures that standard insurers will not cover. Surplus lines, brokers, licensed to place insurance with non-admitted insurers for risks that cannot be handled by standard markets. Description: surplus lines insurance is designed for high-risk or unusual exposures that standard insurance companies are unwilling to cover. This could include risks like exotic cars, high-value artwork, or construction projects in disaster-prone areas. Surplus lines brokers are specially licensed to place these policies with non-admitted insurers, meaning these insurers are not licensed in the state, but can legally offer coverage for these unique risks. As an agent, understanding surplus lines can help you find solutions for clients with complex or hard-to-insure needs. Slide 8. Distribution systems in insurance. Terms to remember: career agency system. Insurers recruit and train agents to sell their products exclusively. Personal producing general agent, PPGA. Agents work independently and sell policies from multiple insurers. Independent agency system. Agents represent multiple insurance companies and own their clients' accounts. Description: insurance companies use various distribution systems to sell their products. In the career agency system, insurers establish offices and recruit agents to sell their products exclusively. Agents in this system often receive extensive training and support from the insurer. The personal producing general agent, PPGA system, allows agents to work independently and sell policies from multiple insurers, while focusing more on selling rather than recruiting. Finally, the independent agency system allows agents to represent multiple insurers, giving them more flexibility in the products they offer. These agents own their clients' accounts, meaning they can move a client's policy to another insurer if needed. Each system has its advantages depending on the needs of the client and the agent's business model. Slide 9. Direct response marketing. Terms to remember. Direct response. Insurance sold directly to the consumer via mail, telephone, or internet without an agent. Advantages: lower costs, more accessible for consumers. Description: direct response marketing is a method of selling insurance directly to consumers without the use of agents. This approach is often used for simpler insurance products like term life insurance or auto insurance. Companies use mail, telephone, or the internet to reach consumers, offering lower-cost policies due to the lack of commissions for agents. While this method makes insurance more accessible and affordable for some consumers, it often lacks the personal guidance that agents provide. As an agent, understanding direct response marketing is important because it represents a growing segment of the market, particularly in the digital age. Slide 10. Regulation of the insurance marketplace. Terms to remember. State regulation. Each state has its own insurance department responsible for regulating insurers and agents. National Association of Insurance Commissioners, NAIC, promotes uniformity in state insurance laws. Description: the insurance marketplace is highly regulated to protect consumers and maintain fair practices. Each state has its own insurance department that regulates insurers and agents within its jurisdiction. These departments oversee everything from licensing requirements to handling consumer complaints. The National Association of Insurance Commissioners, NAIC, works to promote uniformity in insurance laws across states. Although states are the primary regulators, the NAIC helps coordinate efforts to ensure that the industry operates smoothly on a national level. As an agent, you must stay informed about your state's specific regulations to maintain compliance and protect your clients. This completes Chapter 3, the Insurance Marketplace of Session 1, General Insurance. With this, we complete Session 1, General Insurance. Coming next, new session, Session 2, Life Insurance. Chapter 1, Life Insurance Basics.
Great job. Great job completing this session. You're building a strong foundation, and the next chapter will take you even deeper into the essential skills you need to master. Let's keep momentum going. Jump into the next session and continue your journey to becoming a top-notch life and health insurance agent.